Hello and welcome to the Business Standard Morning Show. I am Ruchika Chitravanshi. It is 28th of June 2023 and here are the top stories for the day. Can Go First take off once again? Will the Titan sub-tragedy sink risk tourism? Should you invest in microcap stocks? And what are Artemis Accords?
Go First has secured lenders' approval for interim funding of 400 crore rupees. With this, the grounded airline, which has filed for bankruptcy, may come to the runway again. But will it finally take off from the runway? Bhaswar Kumar brings you the answer.
Hundreds of flyers had to rejig or even shelve their summer vacation plans recently as spot airfares skyrocketed in May before settling down in June. At its highest, the one-way fare for a Delhi to Leh flight in May shot above 40,000 rupees, reportedly more than thrice the prices a year ago. The disruption occurred because Nusli Wadia-owned Go First suspended operations on May 3rd, leading to a demand-supply mismatch. Flyers did receive relief eventually, with the Civil Aviation Ministry stating on June 13th that average spot airfares on 9 routes flown by Go First had declined by up to 33% compared to the week ending June 11th. However, Go First's revival is still important, as experts warn that spot fares could potentially rise again because the key problem remains. More passengers are chasing fewer airline seats. There is also a long-term concern that Go First's grounding could accelerate the formation of an effective duopoly in the Indian civil aviation sector, with Indigo and Air India ruling the domestic skies. Indigo registered its highest ever domestic market share of 61.4% in May, capitalizing on Go First suspending flights. And taken together, Vistara and Air India's current market share already adds up to almost 20%. Both airlines belong to the Tata Group. Against this backdrop, some hope has emerged. Go First's lenders recently agreed in principle to support the airline's request for over 400 crore rupees in interim funding to restart its operations. The development comes after the airline's insolvency plea was admitted by the National Company Law Tribunal on May 10th. The airline's resolution professional had recently submitted a business plan and a request for funding to the airline's Committee of Creditors or COC. The COC comprises Go First's lenders, which are the Bank of Baroda, Central Bank of India, Deutsche Bank, and IDBI Bank. Going ahead, Go First plans to operate around 150 daily flights with 22 aircraft. While the lenders have given an in-principle nod, the additional funding would require approval from the respective bank boards. This will happen once the Directorate General of Civil Aviation clears the plans. Go First intends to start operations on July 1st. While this is a promising sign, the original problem is yet to be resolved. Go First had said it filed for insolvency because Pratt & Whitney engines that were allegedly faulty had grounded about half of its 54 planes. At present, Go First is challenging Pratt & Whitney's application for a stay on an arbitral award. On March 30th, Go First secured interim relief from the Singapore International Arbitration Centre, which directed P&W to supply the airline with a certain number of spare engines until December 2023. Earlier in May, while opposing Go First's enforcement application in a US court, the engine manufacturer said the airline has no right over engines. Against this backdrop, what do the experts think are the prospects for at least a limited revival at Go First?
See, there is an obligation on the COC and the RP to keep the company afloat. At least during CRP period, they have to keep it a going concern. So the necessary minimum expenditure have to be funded. I think Go Air must be having something around 200 crore per month expenditure to keep it just afloat. So that is, so far 425 may not be sufficient for them to start up the operations. So they have multifarious challenges ahead. Even if they operate on a limited scale, the restoration of the confidence of passenger is the biggest challenge now. And secondly, they have to seek that engine issue you pointed out. It's one of the biggest challenge that say the company came into CIP, IBC because of engine issue. the dispute they were having with the manufacturer. So so far so good, but I have a doubt because this much of funding may not be sufficient.
Yes, it may be possible that Go First takes off again in this scenario. But first, we need to understand that this is an interim finance is a short-term measure based on the resolution professional's assessment on the cash requirement from July to November, right? So according to the RP, an infusion of rupees 425 crore would be sufficient for small-scale operations. Now, the lenders in their assessment feel that further funding may allow the airline to get more investors on board. That would be post the restructuring of debt. This also ties into the point about the engine issues, where, if there are more investors on board later, that could also maybe somewhere put more faith in the airline from the lessor's point of view, where the lessors would again lease their planes to Go First, and then basically Pratt and Whitney can then help Go First in that way. Right now, whatever in the court that they have challenged Go First, where the lessors had actually pulled out their agreements, and Pratt and Whitney said that they are no longer answerable to Go First.
Clearly, there is both cautious optimism as well as skepticism about Go First's possible revival in the near future. But what about a broader recovery in the longer run?
For the long-term revival of Go First, it will depend on serious recapitalization along with an extent of restructuring of the debt and liabilities during insolvency. The interim funding gives them a window and time to seek new investors.
A limited revival of operations may be possible in the immediate future after overcoming significant challenges. A broader revival that sees the airline become healthy will require injection of significant capital, winning the confidence of flyers and lessors, and a solution to the engine issue. But success on all these fronts is still uncertain.
Go First's return to the sky will indeed be good news for consumers, as the aviation market is left with only two big players, Air India and Indigo. From the sky, let us shift our focus to the depth of seas, which has become a favorite destination for adventure-seeking tourists. But the recent implosion of Titan submersible has highlighted the other aspect of adventure tourism, the risks attached to it. So will the Titan sub-disaster sink risk tourism? Ayush Mishra finds out.
Scaling the summit of Mount Everest has long been the fancy of mountaineers across the globe. Space and ocean exploration, on the other hand, has been the purview of scientists who would deploy rockets and submersibles. For decades, rapid urbanization, rising disposable incomes, and the influence of social media has made risk tourism a multi-billion industry. But the recent implosion of the Titan submarine has raised a question on risk tourism now. Risk tourism combines activities including space tourism, ocean exploration, mountaineering, and certain location-based activities that involve a high degree of risk. With the popularity of commercial space travel and deep-sea exploration, there has been a surge in the number of adventurers who seek extraordinary experiences beyond the natural boundaries. Individuals with deep pockets can now make their dreams of venturing into uncharted territories a reality. Risk adventure sport can be classified into 4 categories: land-based, water-based, aero-based, and mountain-based activity. People go for these activities to satisfy their adrenaline rush. Prateek Gupta, who is the founder of Adventure Sports Cover 360, shares a perspective of extreme adventure tourism in India.
We have a young population in India who is interested in travel, sports, fitness, and to explore new areas and new, ways to excite themselves, to have an adrenaline sort of fix from somewhere. So a lot of young people, of course, are venturing into these. There is a big influx of middle age, if I could say 35, 40 plus corporates and other people who are also going into this.
Advancements in technology have made it possible for wealthy individuals to dive into unimaginable depths in oceans. However, the extreme pressures, underwater currents, and limited knowledge of deep sea environments made these expeditions inherently dangerous. For those who wish to take a trip to outer space, companies like SpaceX and Blue Origin offer tickets for the same at astronomical prices. Crucial here is the potential dangers involved. Despite stringent safety measures and protocols followed by these companies, space and ocean exploration remains an inherently risky endeavor. So what impact will the Titan sub accident have on risk tourism around the world?
So there are three things. One, it will not stop the business of this industry, that's adventure tourism. Two, probably it will just make all the companies adhere to more stringent safety standards, which most companies do who are serious in this business. Third, it will actually prompt a lot of people who want to indulge in these activities to ask the right questions when they want to kind of go with a particular company that is conducting adventure sport. To ask the right questions such as, are they capable of handling this event or this activity? Do they have certified guides? Do they have certified equipment? And have they taken into account all the risks that are possible? The only thing when you talk about adventure sport is that you can't beat the nature and you can't avert natural disasters. But there is a mechanism to even be safe in such scenarios when you take prior cognizance of all the possible risks that come with the activity.
Gupta points out a counter effect of tragedies during adventure activities. Instead of driving people away, such disasters tend to attract more people towards adventure sports.
Let's say on Everest also, people know there are deaths. There are as we say, death-defying stunts. People are taking skydiving. People are going in aerosports. They know the dangers, right? But the thing is, the more the danger, the more it is attracted. More it attracts more sort of adrenal junkies, as we say. So higher the danger, higher the chances that it will become into a cult sort of a offering or a product.
As the boundaries of human exploration continue to expand, it is imperative that safety remains the top priority. Adventure enthusiasts say that pursuit of awe-inspiring experiences should be accompanied with thorough risk assessments and comprehensive safety protocols. Some extra caution can ensure that our extraordinary journeys are safe while the Earth opens up its unknown side to us.
Dealing in stocks with its unexpected movements can also be as thrilling as bungee jumping. Amid the ongoing bull rally, microcap stocks have been the flavor. With a sharp surge of 15% this year, the Nifty Microcap Index has sharply outperformed the Nifty 50 mid-cap and small-cap indices. In our next segment, Nikita Vashisht talks to market experts to understand the reason behind this rally and if these stocks are worth your money. Microcap stocks have caught investors' fancy the most amid the current bull market. Against a mere 3% gain in the benchmark Nifty 50 index, the Nifty Microcap Index has surged 15.5%. It has also outperformed Nifty Midcap and Small Cap indices this year. Microcap stocks are outside the purview of Nifty 500 stocks and have a market cap of up to 10,000 crore rupees. So what is brewing in the microcap space?
When the markets rallied from 16,000 to 18,000 during that whole period of rally, the microcap index did not perform at all. But now when the large cap index and Nifty 50 is touching a lifetime high, then that is a time when these microcap indexes catching the eyes of the investors, and that's where a large part of the incremental money is going towards in order to chase return, in order to try and make a quick buck.
Thus far in calendar year 2023, 66% of 250 microcap stocks have generated positive returns. Among individual stocks, Jindal SAW, Titagarh Rail Systems and Kayans Technology have doubled investors' wealth in calendar year 2023. Gauging the rally, Motilal Oswal AMC recently announced India's first microcap fund. However, given that microcap stocks carry risks of low liquidity and cyclicality, are they worth your investment?
Since available research is limited in this space, most of the individual investors may not be able to take informed decisions in microcaps, so could actually end up with a bunch of duds. It needs professional expertise to identify the performing ones among them. So this NFO of microcap stocks is a niche product, as most of the mutual funds don't really look beyond Nifty 500. However, we should remember that these stocks have already performed quite well, so immediate outperformance could be limited. However, since we are looking at a long-term bull market in India, it could make sense for a long-term portfolio.
Inexpensive valuation of microcaps in terms of earning yields too favor the current upside momentum in the segment, said a recent ICICI Securities note on microcap stocks. Thus, microcap stocks are better over a longer term horizon and deserve a place in a seasoned investor's satellite portfolio. On June 28, FNO expiry and US Fed Chair Jerome Powell's speech at ECB Forum of Central Banking will guide the markets.
He's making plans for an early retirement. Business Standard.
A lot of investors, it seems, are over the moon as Sensex is hovering close to all-time high. Talking of the moon, the United States is planning to send humans again to the lunar surface by 2025. And during Prime Minister Narendra Modi's recent visit to the US, India joined the Artemis program, which is aimed at another moon landing after the Apollo missions. So what are the Artemis Accords and what do they mean for India's space exploration ambitions? Vasudha Mukherjee explains.
We're going back to the moon, and this is why.
The moon is a treasure trove of science.
It holds opportunities for us to make discoveries about our home planet, about our sun,
and about our solar system.
The United States is going back to the moon. And if all goes well, humans will put feet on the lunar surface after over 50 years. And NASA's Artemis mission is laying the groundwork to take a person of color and a woman to the Earth's only natural satellite. The Artemis Accords are a set of agreements between the US and the partner nations on how they will work together on and around the moon. This treaty, which is not legally binding, outlines the principles for cooperation in space exploration and the use of the moon, Mars, comets, and asteroids for peaceful purposes. NASA, in collaboration with the US Department of State, established the Artemis Accords in 2020. The Accords are grounded in the United Nations Outer Space Treaty of 1967. Given that multiple countries and private companies are actively involved in lunar missions, the Accord lays out a set of shared principles to govern civil exploration and the use of outer space. The Accords are agreements that reinforce the commitment to international space treaties and agreements, such as the Registration Convention and the Rescue and Return Agreement. The principles include conducting all activities in space peacefully and with full transparency. This includes sharing findings, registering space objects, and releasing scientific data. The Accord calls for mindful use of resources during space exploration and development. NASA and its partners must plan to mitigate orbital debris and agree on the efficient disposal of spacecraft after a mission. By becoming a signatory, India can collaborate with others, including the United States, in future moon missions. This collaboration enables the sharing of knowledge and expertise, contributing to the advancement of scientific research, technological development, and the expansion of humanity's presence in space. Till date, nearly 30 countries have signed the Accords since it began in 2020, including Australia, Canada, Japan, Luxembourg, Italy, the United Kingdom, and the United Arab Emirates.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
These space treaties also ban the stationing of weapons of mass destruction in outer space to ensure our safety. Well, that's all for today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.